Hi, Colin Plume, and this is Self-Made Millionaire Tips. Got some friends with me today. Got Johnny Kometz, Digital Asset Marketing Manager.
Equity Trust Company.
And my co-founder, Guy Gottschalk from My Digital Money. And today we're going to talk about crypto, money, a few different fun things. So we're going to get into it and kind of see how things go. Johnny, thanks for coming. I appreciate it.
Thank you so much for having me, guys. It's really cool to be out here and check out your studio and really come see how you guys have been, putting it down out here. This is awesome.
Yeah, we're doing it.
I think to start this one off, you told us a pretty cool story about the Bitcoin conference not too long ago.
Yeah, that was in Miami.
Yeah, you should share that story with the audience.
Yeah, I think so the beginning part of that story, not to throw Guy under the bus, but I'm going to. We ended up at a party the night before. The Bitcoin conference is quite a party. And we ended up at the house of in Miami, at this house of one of the owners of what did he own? He owned Maker or
I think it was MoonPay.
MoonPay, yeah. We ended up at his house, and we got denied at the door because we were not on the list. And that was fun. And I was like, all right, well, let's get out of here. And then Ivanka Trump and Kushner walked out. And I looked over to Guy and I said, we're getting in this party. I don't care what happens. We're going into this party. And so sure enough, one of Guy's old friends showed up. He's kind of a wheeler dealer talker and just kind of schmoozed our way, and we ended up into this incredible party. It was actually Chris Bosch's old house on the water.
Oh wow, basketball player.
And we walk in, and DJ Tiesto's DJing in his living room.
Tiesto.
And and no one's paying attention. Very Miami vibe. And Guy and I were walking around, and I had plans to be home relatively. I wanted to be home at 11 or something. And we ended up staying at this party pretty late. We also had some business partners there that we were sort of wining and dining. So the Bitcoin conference the next day starts at 8 a.m. And we had all talked about, let's be there at 8 a.m. And guess who was the only person there at 8 a.m.? Yes.
You're probably there at 7.
Everybody was sleeping overachiever.
Yeah, I was there early. And so it's, starting to wake up, and being Miami, being a Bitcoin conference, no one's really around. And sure enough, this guy walks up, and he's got this badge that says whale. And he's like, oh, what do you guys do? And I explained it, explained the business of My Digital Money. And he's like, oh, I think you guys should go after college kids. And I was like, well, actually, we're going after IRAs. And he's, giving me advice. And, so how did you begin? So I'm like, all right, great. I'm trying to end this conversation. And he says, I say to him, how did you become a whale? You must have really been proactive in the crypto market. He goes, well, actually, my roommate a few years ago was a heavy gambler, and I knew he was into Bitcoin, and he died. And I took all the Bitcoin, I took it off his computer, and that's why I'm a whale.
Well,
and he's giving you.
And he was giving me advice on how to run a business.
He was probably giving you an advice on how to commit a crime.
Exactly. And which leads to the title of this podcast. It's a great way to become a millionaire. It's this deal. No. So anyway, so that was my introduction into this conference. And Guy showed up a little bit after that, and I was fuming at this guy giving me advice when he had, stolen his dead roommate's.
You should have listened on how to commit a crime.
So that was my experience at the Bitcoin conference, which was quite an event. I think you'd agree, Guy. I mean, we had all kinds of speakers there. It was fascinating to be there.
All kinds of parties.
It's a big deal.
It was a great event. Even Tucker Carlson was there, who just today got fired.
Yeah, I saw that.
Or left. I don't know how he parted ways, but he was interviewing there. I mean, it was just everywhere. Everyone in the Tom Brady, anyone was there. This was it was February, right? Or January?
Yeah, this was in 2022, right?
22, yeah.
Yeah.
2022.
But so much has happened since then.
So much has happened.
Yeah. One of them is FTX.
Yeah.
Yes.
And another major thing happened is that they actually announced they're coming back.
The comeback.
That's crazy.
The comeback of the year. Yeah, FTX.
Is it actually happening, or that's just talk?
No,
Right
it
now?
is happening.
Wow.
Yeah.
So first question is, number one, based on everything that you know, what are the chances that they will actually be able to make a return and that they will be able to return the funds of the customers, which they claim they will actually do?
Well, the first thing that I saw was interesting is that as soon as they made this claim that they're coming back, their token went up by 30%.
Yeah.
So it felt like, sort of what Elon Musk does with Shiba Inu, is that it was a way to sort of manipulate the price of their token, right? I don't think people's memories are that short. Maybe I'm wrong, but I can't imagine that people are going to have confidence in FTX, even though they brought in a new person who's running the data, but that guy's he's a bankruptcy lawyer.
Yeah.
Right. I mean, he's right,
he worked,
Johnny.
Yeah, he worked the Enron bankruptcy back in the day too. So I mean, he's got a lot of experience with this type of stuff. I don't want to say fraud, but fraud,
Or cleaning up the fraud.
Cleaning up
right?
the fraud. Yeah.
But I don't think anyone's going to do their Enron didn't come back into the
No, right? Yeah.
And confidence is key when you're talking about an exchange.
Absolutely. Yeah.
And it's something that when we, started My Digital Money and when Equity Trust sort of got involved in this business, it was, how do you create a system? How do you create infrastructure that has a level of trust there?
Yeah.
And a lot of it is, creating some separation. The great thing about Equity Trust is the assets are held in a trust.
Yep.
Which is one of the great things that why we, are partnering with you guys on this, is we know that no matter what happens to Equity Trust, everyone's investments are safe. And this, whether it's crypto or gold or anything, they don't own those assets.
Right.
Which is the antithesis of what FTX actually did, right? They
100%.
commingled all of their assets.
Yeah, commingled them all, didn't have them, segregated in any sort of manner, and then inflated, their
books.
Their books.
Yeah, yeah, and they were running a lot of their things off Excel, which I think is hilarious.
Is that right?
Yeah, you didn't know that? They were running a lot of their. And then, there's just funny. I mean, it's awful what happened to people. But, and people's money, the idea that they're coming back, I mean, people haven't even gotten their money back. They haven't gotten their crypto back. I know we talked about this off here, Johnny, but like they were saying that they want to pay people in cash, right? That's one of the ways. But people don't want cash.
They want their crypto.
They want their crypto.
Yeah.
They want to get paid back in the crypto. Obviously, the government would love for you to get paid back in cash because they're gonna tax you,
Yep.
right? I mean, that's if you're in a gain, it's going to become a taxable event,
100%,
right?
yeah.
I mean, that would be how it's handled. So there's so many issues with this, and that's why it's really important for people that want to become millionaires or want to protect what they have, or and I always say this is like you get into crypto early. You believe in a coin or some coins, you take some risks, you want to make sure that those risks pay off down the road.
100%.
And if you're not with a custodian or if you don't have a partner that is doing things properly, we have all the tax reporting, whether you're doing an IRA or outside of an IRA, we do all the tax reporting, all that's taken care of, all the storage of the assets is taken care of. I mean, these are things that you really have to think about. And the market is expanding. It's growing more because Fidelity's coming into the market. Yeah. There's a lot of new adopters. I think they say there's about 300 million users in crypto, give or take.
Yeah, somewhere around there.
And they think it's going to hit the billions, right?
Oh,
so it's important to make sure that you are doing things the right way. And if you take that leap of faith, into crypto, that it's done properly, and then you can actually take advantage of those wins, because there's a lot of people in FTX right now that can't take advantage of wins.
Yeah, they can't because their assets are frozen.
Yeah,
so they're held with someone else, and they can't access them. And
yeah, so maybe for Johnny and Guy, the truth is that FTX isn't the only platform that's doing business the way that they're doing it.
100%. Yeah,
almost all other platforms are doing the same thing. So it's just, why do you think people still invest in these platforms, right? Like, Coinbase?
Yeah, I think, it's more or less an assumption that these companies or these platforms are operating under the same laws that people just assume that they are, like their typical banks or any other sort of financial services provider. People just assume that these places are, under the watchful eye of the government when, it's been pretty obvious over the last decade or so that crypto is essentially the Wild West of finance. It's almost just seeing what sticks and what doesn't. And unfortunately, a lot of people have gotten hurt over the last decade or so, which is why finding a place to invest, your crypto or your money into crypto, you should find a trustworthy place, someone that is free from any sort of conflict of interest when it comes to the way they custody their assets, which is, an FTX case, to be more specific. There was just so much conflict of interest there because like you said, Colin, they managed their books with an Excel spreadsheet, and nothing, there was no proof of reserves reports, no proof of liabilities, no proof of anything really, and people just took them at their word until it was too late.
Do you think platforms should be prohibited from creating their own crypto?
That depends, right? So, the exchange token thing is a great idea. I think, let me see, there's a few companies that pioneered that before FTX. Binance, for example, they have their BNB token. They're going through a whole nother issue too right now. But, if that token's used to not inflate their books and, the overall monetary value of their business, and it's actually used in a way that provides some utility to the exchange users, i.e., exchange fees or different types of services available through using that token, then it becomes more of a utility token versus a cryptocurrency that you're using to trade and transact with, on a daily basis.
It's a reward, right?
Yeah, it's a reward.
You're creating a reward system which has been successful in many different industries. Yeah. Years ago, I talked about, Starbucks, what they've created. And in essence, Starbucks is a bank, right? I mean, they've created a system where people are depositing money on those cards and they get rewards because of that. That gives a lot of liquidity to Starbucks, and that's why they love it. And that's the same idea of these tokens. But it is tricky. I do think that FTX was using it as a way to raise money for the business, and I think that's the unethical part of creating those tokens. And you have to be careful. There really has to be, like you said, a utility or some kind of reward that they're benefiting from that's independent of the business. So I think if an exchange gets to that size, I think there should be some regulation involved.
Absolutely.
There. And, and I think over the last year since that conference, the thing that's been interesting is legislation has really become an important part of what everybody's talking about. Guy and I, Johnny, we talk about it a lot. What are some of the things that you think, Guy, has been, in terms of legislation, what do you think's been moving forward, and what do you think's been sort of slow on the legislation side?
Yeah. Well, it's been very slow in the U.S. We're in this environment where it's kind of like regulation by enforcement, where we're trying to apply old rules that really apply to traditional capital markets to crypto. And when I say we, like the SEC and CFTC mainly, and they go after companies and they sue companies when they're not even aware if they're actually violating any regulation or not, because it's not clear if cryptos are securities or commodities or what they are, and the SEC is very vague about it. But then they go and they sue companies for the alleged sale of unregistered securities. So there hasn't really been any regulatory framework. This year we made a little bit of progress. There's been a draft bill for stable coins that came out of the House House Financial Services Committee, right? And that was kind of shot down last week by Democrats. So there isn't like bipartisan consensus on it. So it's not really anywhere closer to being an actual bill, but it's at least a start. There's a draft out there. I think this year we might make progress. There's a lot of talk in Congress about legislation, but we just need people on both sides of the aisle.
Yeah.
Do you know of any country that's making the right progress when it comes to
the EU just came out with
it just passed.
Yeah, it's called MiCA. So it's probably the most comprehensive regulation to date.
Yeah, it's a good step forward.
Do you have highlights of that regulation?
I don't know if you know it, but
Some stuff in here.
yeah, I don't know the details, but essentially it puts rules around exchanges and brokers and different players in the market around transparency and around supervision of transactions, disclosures. So it puts rules around token issuers and platforms. Now I haven't looked into the details of that particular bill, but at least there's agreement and there's some kind of rule. Whether it's perfect or not, I don't know, but it's better than not having any clarity, because that just makes people scared of entering the market, and it drives innovation away from the U.S.
Well, and it creates a situation like FTX, right?
Yeah.
If we had legislation in place to protect people, and the amount of money that they, the fact that they were set up in the Cayman Islands, there were so many red flags on this business. And even further today, let's just talk about what's happening with Binance. I mean, Binance, is having a hard time finding any U.S. banking relationships. And I think that they are it's going to be difficult for them to do that, because who's going to put their name on the line for a cryptocurrency exchange that's overseas when you have a CEO that's sort of against authority, right?
Yeah.
I mean, so what is this exchange going to do now if they can't get a bank here in the U.S.? So I think, as much as it is hard to say, because I do like the idea of what cryptocurrency is, and that it has this freedom and it's peer-to-peer, legislation does create some stability in the market, and it also creates stability for the major coins.
Yeah, absolutely.
And I think that's the thing that's sort of will drive this, if crypto is going to be around forever, is shrinking the market, creating legislation, and that'll prop up these coins, and allow for creativity, allow for things to move forward. And I think that's where things have to go, because as we know, when the market is too small, part of the reason FTX went down is because their coin dropped, so they had liquidity issues, but you can only drop a coin in a market that has very little liquidity, right? It's not possible right now in the Bitcoin market. Some small event, we've seen it. We've seen these events. And we did see Bitcoin drop down to 14,000, and then it was pushed back up because there's more adopter, there's more people moving into the market. So I do think legislation in this way is good, and I think it will prop up some of the major tokens, which is part of the reason that with My Digital Money and what we have, we're focused on the larger coins that have utility, right, Johnny?
Yeah, absolutely. And that's one of the major points that we look at when we are attempting to look at new coins to offer through the platform. What's the utility? What is the real world value that this token brings, or this coin? Because there's a difference between the two. But yeah, like you said, the regulation is important. And over the last 2 years, we've seen institutional adoption really make its public debut, pretty strong and pretty robust, more than we've seen over the last decade. And the only way I think a lot of these big players like a Charles Schwab or Fidelity are really comfortable in offering these crypto products to their investors and customers is if there is, stiff regulation in place to where, you're not unknowingly setting yourself up for failure by investing in an FTX token that, market. Everybody thinks that before it went bust, everybody thought it was going to be awesome. Everybody thought it was going to continue going up in value because on its face, let's look at it. They had Tom Brady, they had Shaquille O'Neal, and everybody, all of the celebrities that they had, talking positively about this platform. And a lot of people, that's all they need is that verification there. And then they're like, all right, well, I hear about Bitcoin and crypto and everybody's making all this money. Might as well go try it out. Next thing you know, the platform's going bust and, people are getting hurt. And that's another thing. That's why I'm really happy to be here with you guys and at Equity Trust is, making sure that we are offering a product that people can have a peace of mind in when they invest in it. And that's the reason why I work in crypto. I love the space, but I love helping people more than anything, and I don't want to be a part of anything like an FTX.
Absolutely. And let's be honest, just to wrap this up, the big winner in this whole thing with FTX was, who was the one celebrity that refused FTX?
Taylor Swift. She
Taylor
ruined the curve
Swift.
for everybody.
That is amazing. A testament to her that she took a step back and just said, I'm not taking the cash.
Yep.
I'm going to see what this is all about. Asked some pretty basic questions.
Right.
And
she's the only one who did any
she-
due diligence, and
Yeah.
she's
And it's shocking that these other celebrities didn't even take, they have a lot to, Tom Brady, Shaquille, these guys have a lot to lose. And the fact that they didn't take a step back and really do any due diligence is quite scary, right?
Yeah, she did, I guess, a lot more due diligence than Celsius and
yeah.
those other companies. Maybe they should have talked to her first.
Yeah, so millionaire tips. Listen to Taylor Swift because she knows what she's doing.
Oh yeah.
She just
Oh,
trusted her gut, man. She
Yeah.
had to have been like, this just doesn't seem right. You're going to pay
Something
me how
smells.
much
Yeah.
just to do what? All
Yeah,
right.
smell test.
Yeah.
So just to wrap this up, last question. If somebody comes to you and asks you, like, when I'm making a decision as to what platform it is I'm going to be investing in, what is the one thing that I should know about the company?
I think the biggest thing is how the assets are held. And I think the two things that with my digital money and equity trust is that we and being the CEO, the owner and guy, we're not tied up into any of the actual assets. We don't touch them. We don't own them. And equity trust is the same thing. So you're buying it from us, and we create a platform. You can do that, but we have no hand in your assets.
Right.
And I think that's
important.
the most important question is making sure that the foundation of the company is strong, which we are both strong companies, and who's in charge and their
Yeah.
reputation, and take a step back before you put funds in. Because I think what we found out is even with banks, all these banks going down and crypto is that it's not as easy to move once you make a decision, right?
No, it's
Once
not,
you've got
yeah.
in. So it's better to do the due diligence first and get comfortable and check them out. And I think that's the best way to protect your assets, especially going forward in crypto.
Yeah, I completely agree. That's the most important part is you got to make sure that there are no conflicts of interest there. Like with FTX, the assets were within arm's distance from everybody in the company. And again, just reiterating on what Colin just said is, the assets are held in a custody and a trust away from everything, away from anybody that could be tempted with taking the assets and investing them in something else. So all of that is nothing that anyone has to worry about through investing with our platform.
Yeah. Thanks, Johnny. Guy?
Yeah, basically same thing. Don't commingle assets. And, Coinbase has admitted that, in the case of a bankruptcy,
Yeah.
their clients are considered unsecured creditors, right? And so that's the basic question, like what happens in the case of a bankruptcy? Are my assets mine? And I think, the SEC has said that they're looking at some regulation around storage of assets. So, requiring qualified custodians to hold crypto assets. So it's also important that you work with someone who's a qualified custodian or is partnered with a qualified custodian.
Yeah, absolutely. I think that wraps it up. Thanks for everyone listening in and watching, and we'll see you next time for more millionaire tips.
That's right.